Hello everyone. Let's say you don't want to make money from selling options on stocks. You are afraid of a single stock risk. You are looking for ETF, and this is what we're doing today. With using Market Chameleon credit put credit spread screener, we are going to look only on ETFs and not stock and see if we can find some of the good ETF, the SPY, the QQQ, the Russell, all those, so we can sell some put credit spread, collect income while minimizing the risk of a single stock that can drop in a single day with news, earnings, all that stuff. So this is the plan for the day. And before we get started, of course, there's a disclaimer, and know that this is not a financial advice. I'm not a financial advisor, and also this is for entertainment and educational purposes only. And my name is Ziv, also known as Finance After 40. Now, with that being said, let's go back. And if you are a member of Market Chameleon, then great. Go over to the screeners right here and pick this one, Bull Put Spread. It will bring you to this screen. And if you're not, then there's a 7-day trial, link in the description below. Now, what I'm doing, how did I get here? I'm looking for this, okay? These are all pre-existing default filters that Market Chameleon found for us. And you can go and look for trade ideas as much as you want all over those. But there are two that I want to focus and pick one. So for this specific, again, we're not doing stocks. We're going to do ETF. So you got two options. One is ETF. Okay, that's good. Seasonal strength. Positive theoretical edge, that's one, but I want to do the other one, which is ETF, positive edge and downside cushion. This is what I like, meaning the downside cushion is the ETF can still drop and you can still make money because you are selling a put credit spread out of the money. You have a positive edge, meaning that you are making more income based on what you should have made in the past, based on history, which means you're collecting more premium, which is also good, and ETF, not a single stock. So let's click and see what we got. And in this basically search, we got, look at this, one page only, because this is the ETF. You're not going to get 1,000 page of like different stocks and all that. We got barely 10 results. I don't know how many I can count on one hand or some two hands. And we got this, I think this is the VIX. QQQ, IWM, the ones that we like, know and trust. Now let's see the filters that Market Chameleon found for us and see if we can do anything. We got the expiration for this, okay, next 30 days. This is good. We are selling put credit spread up to the next 30 days on ETF, assuming that there's no stock risk. This is actually something good that I like. Max spread the usual up to 5, and we got any in here, and this is what I like, theoretical edge above 10%. Again, that's good. That means that whatever the trade is, you are collecting more income than what you should have collected based on history. So based on history, should collect on I don't know, on the SPY put spread, I don't know, $100, but now you're collecting 150. So that's a good thing. Theoretical win rate above 60% and show best only by theoretical edge, by symbol, and you can filter all this. I want to do by downside cushion, okay? Or no, let's leave it be. Worst case, I can filter in the results by theoretical edge symbol. Okay, so let's do this. And okay, so that is what we got. Now I'm gonna filter by market cap. Okay, so let's filter by market cap because I don't really care about the UVXI. I like, yeah, the SPY, the Q, the Russell. What is XBI? Just bear with me. Spider, biotech, interesting. And the other one, there's a lot of ETFs. And this one's not Spider, iShare, US Home Construction ETF. This is ETF. There's a bunch of stocks in one. Spider, so home builders. There's a lot of volatility there, I see. Another home builders. What is TZA? I don't know. This is interesting. Direction, daily small cap bear times free, and XRT Spider Retail ETF. Interesting. Let's stick to the ones that we know. We got ourselves SPY, okay. Let's see what we got for SPY. This is interesting. I can sell a put credit spread on SPY, price 563 almost. Market cap is huge. And we're gonna go back to this in a second. This is the money that you're gonna make. But the trade itself is for October 11, okay? October 11, like 3 weeks from now. And it tells you sell the 550 put, buy the 548 put, and that's it. And as long as the SPY, which is 562, so it's about 2.5% from here. It tells you exactly, you see here, downside cushion 2.3% from here. As long as SPY stays above 550 by expiration, you will collect your whole income, and the beauty of your income is $38 compared, this is the edge, compared to $9 only. Compared to $9, this is a 17.6% edge, 92.3% historical win rate percentage, which is pretty awesome. Yeah, not historical, like the frequency in which the current market price of the spread would have resulted in positive return based on historical price change available. Okay. Keep this in mind. Let's round it up. $40 compared to $10 is what you should have collected as income based on history. 4 times more. You're collecting 4 times more income by selling the 550, 548 for October 11. Your max income is $40. Let's say you put a limit of 0.4. Your max loss is 160. If SPY doesn't move, look at this. This is beautiful. If SPY doesn't move, you are making in the next 3 weeks about the 23.5% return in 3 weeks yield on your money, which is pretty awesome. I mean, you're risking not a lot. You're risking 160. 10 contracts is risking 1,600, collect $400. What's wrong with that? And if SPY goes below 550, okay, I understand, but you have time, and every day there's theta decay, and that's all different topics. But if you're bullish and you think SPY will go up, or SPY will stay the same, or SPY will go down but up to 550, yeah, that's an interesting trade. Let's see the other one. We got ourselves the QQQ price 473, and it tells you, look at this, sell the 461, buy the 456, put and put, okay? And as long as the QQQ stays above 461, great. And here you got almost 3%, 2.8% downside cushion. That means the QQQ, of course it can happen, can go down almost 3% by the expiration, which is also October 11. They need to go down by almost 3% for you to still break even. It needs to go down even below that for you to lose. And your max profit, look at this, $106 compared to $40. So this is like 2.5 times more income. Okay, 2.5 times more income. Here it's 4 times more income. 17.1% edge. Same win rate percentage based on history, over 92% win rate. And if nothing happens and QQQ stays flat, for example, that's 27% return on your money, almost absolute bonkers. Let's see what we got on the Russell. The Russell is okay, but this is for September 18, which is basically in 2 days. Look at this. This is interesting. This is super risky, but I mean, it's up to you. September 18 is the expiration. Price is 217.6, and it tells you to sell the 215, buy the 212, collect $73 compared to $44, 82% win rate. And you have a 1.6% cushion for the downside if the Russell goes down. Again, in 2 days it expires, which is insane. If nothing happens by then, maybe in a day or two, this price, just the premium, because the price doesn't move much, will go down because of theta decay. 32.2% return on your money if IWM, the Russell, stays the same. And you can go, look at this. I'm not going all the way down, but this XBI, what did we say it is? I think Onbill or something. Look at this, collect $28 compared to $2. That is absolutely insane. Also for October 11, the price, for example, I'm not doing this 101, sell the 95.5, buy the 93 free, 12% return on your money, but you have 6% cushion. That is absolutely crazy. Absolutely crazy, 6% cushion in like 3 weeks. That means that this ETF, which is Spider Biotech, okay, it is biotech, but still, it is an ETF, needs to go down over 6%, just by 6% for you to break even. So there's a lot of things, but for me, I don't want to go too deep. I think the SPY for me is the better choice between those. Not a financial advice, but I will probably tomorrow, if all things are equal, I'll probably do the SPY put credit spread. If this was valuable, if you don't want the risk of stock put credit spread, try ETF. This is a filter. I showed you another filter, and this is just for put credit spread. There's other opportunities, which we'll do in the next couple of videos. 7 days trial for Market Chameleon, link in the description below, and I will see you next time.